If you're self-employed, there's a good chance your accountant is really good at their job. And that's exactly why you think you can't buy a house. Your tax returns say you barely make anything. But here's the thing. There's a whole loan type that never looks at your tax returns at all. I'm Brad Haines, a Washington mortgage loan originator. I work with first-time buyers and credit-challenged files, the buyers other lenders turn away. And business owners are one of the most common groups who count themselves out. Not because they don't make money, but because their tax returns are built to show as little of it as possible. Here's the bind every self-employed person knows. All year, you do the smart thing. You write off every legitimate expense. Mileage, equipment, the home office, supplies, because that lowers your tax bill. That's good business. Then you go to buy a house. And a traditional mortgage looks at your tax returns and sees your net income. What's left after all those write-offs? On paper, it looks like you made almost nothing. So a traditional loan says no or barely qualifies you for a fraction of what you can actually afford. The exact thing that saved you money on taxes is now the thing standing between you and a house. It feels like a trap. And for a traditional loan, honestly, it kinda is. So here's what most self-employed people have never been told. On the channel I work through, and every lender does this differently, so this isn't universal. There's a loan type called a bank statement loan. And instead of your tax returns, it looks at your actual bank deposits, the real money flowing into your business over the last 12 months. Think about that. It skips the tax return entirely. In fact, on these loans, if there's a tax return in the file, it has to be removed. The whole point is to look at the money you actually bring in, not the number left over after your accountant works their magic. A few things that make this real, and that surprise people. You generally need 2 years of self-employment in a business that's been around 2 years. And here's one people love. If you started as a sole proprietor and later became an LLC or an S-corp, that does not reset your clock. The business is treated as continuous. So becoming an LLC didn't cost you your history. It counts. Now, it's not as simple as every dollar you deposit counts as income. The lender applies what's called an expense factor. They assume a percentage of your deposits went to running the business, and they count the rest. So it's your deposits minus a reasonable assumption for expenses. But for a lot of business owners, that number is dramatically higher than the net income on their tax return. Now the straight talk, because this isn't magic. A bank statement loan is a different kind of loan, what's called non-QM, and it usually comes with different terms than a standard conventional mortgage. That's the trade for qualifying on your real cash flow instead of your tax return. Whether that trade is worth it depends entirely on your situation, and that's a real conversation to have, not a given. Clean banking matters. These loans look closely at things like overdrafts and non-sufficient funds. A pile of NSFs in your recent months is a problem. So if this is your path, keeping your accounts clean starting now actually matters, and keep your business and personal money separate. Commingling, running personal expenses through the business account and vice versa, makes these loans messier. If you're a business owner planning to buy, cleaning that up early pays off. None of these are deal breakers. They're just the reasons you want someone looking at this months before you buy, not the week of. Here's why I made this. The self-employed buyer who assumes they're locked out because their tax return looks thin is exactly the person I built my practice around. They're not unqualified. They're just being measured by the wrong ruler. The whole game is using the right tool for the file. A tax return is one lens. Your actual deposits are another. And for a business owner, the second one usually tells a truer story about what you can afford. So if you've been telling yourself your write-offs make a mortgage impossible, that's the exact thing worth a free 10-minute conversation. We'll look at whether a bank statement loan fits, what your deposits actually support, and how to set things up so you walk in strong. You might be a lot more qualified than your tax return makes you look. And if you're a real estate agent with a self-employed buyer who got turned down on income, before you give up, send them my way. There's very often a path that a traditional lender never even checks. That's the file I work.